The Federal Reserve. 8 people in a room in Washington who can move trillions of dollars with a single sentence. If you've ever wondered why every market on Earth holds its breath whenever they meet, this video is for you. The Federal Reserve is the central bank of the United States. Created in 1913, it's the institution that controls the dollar. Not the government, not Congress. The Fed, they print the money. They set the price of borrowing it. And they decide, in large part, whether the economy is running hot or cold. It's run by a board of governors in Washington, plus 12 regional Fed banks. The most important committee is the FOMC, the Federal Open Market Committee. That's the group of 12 people who meet 8 times a year to decide what happens to interest rates. And those decisions move the entire planet's financial system. Congress gave the Fed 2 jobs. Just 2. Keep prices stable and keep as many Americans employed as possible. That's it. That's the whole mission. It's called the dual mandate, and basically every Fed decision you'll ever hear about traces back to it. The Fed's main tool is the federal funds rate. Think of it as the price of money. When the Fed raises rates, borrowing gets more expensive. Mortgages, car loans, credit cards, business loans. Spending slows down. Inflation cools. But growth slows too. When the Fed cuts rates, borrowing gets cheaper. People buy houses. Companies invest. The economy speeds up. But prices can heat up too. It's a balancing act. Cool the economy too much and you get a recession. Heat it up too much and you get inflation. The Fed is constantly trying to steer between those 2 cliffs, usually with pretty incomplete information about what's actually happening in the economy right now. Here's why markets obsess over the Fed. Interest rates are the gravity of the entire financial system. Every stock, every bond, every house price. They're all priced relative to what you could earn risk-free in a treasury. And treasury yields move with Fed rates. When rates go up, stocks usually fall. Bonds get cheaper. Mortgages get pricier. When rates go down, the opposite. So when the Fed even hints at a move, traders reprice trillions of dollars in seconds. That's why a single sentence from the Fed chair at a press conference can wipe out or create hundreds of billions in market value before the next commercial break. It's also why financial news obsesses over the dot plot, FOMC minutes, and every word of the post-meeting statement. They're all clues to where rates are headed next. So the next time you hear someone on the news say the Fed is meeting, the Fed is hiking, or the Fed is cutting, you'll know exactly what they mean. And exactly why your portfolio cares. That's the Fed. We cover the days the markets actually move, typically a few times a week, more when things get wild. Hit subscribe so you don't miss it. We'll see you next time.